And hello, everyone. Welcome to our power scanning session. It is January the 31st, 2026. And once again, today, we will be on the lookout for the most promising swing trading setups for the next week and the next couple of weeks ahead. My name is Daniel. I will be your moderator today in this session. And I'm greeting you today from our beautiful office here in downtown Montreal in Canada. It's a very cold day today, once again. Once again, I walked to the office this morning. It's about a 20 to 25-minute walk at minus 18 degrees. It was fresh, and I actually left really early. I had a different webinar just before this session, so I was already on the street at 7 a.m. Very cold, very dark, but I made it and I'm ready to go today. It's going to be an exciting session of lots of interesting things to talk about. But before we get into this, where are you guys calling in from? Who do we have today in the room? Please put your location into the Q&A box. Let's see. Who do we have? One second. There we go. All right. Keith from Scotland. Hey, Keith, how's Scotland? How's the weather treating you over there? You told me last time it was rainy and cold. Edda from Hamburg. Hey, Edda. Nice to have you. Danica is back from K-Town, Kaiserslautern. Hey, Danica. Nice to have you. Lenny says minus 18. How do you do that? But it's minus 18 centigrade. So it's not Fahrenheit. It's not as as cold as you may think. Nonetheless, very, very cold. Daryl and Lenny is from New York City. I know that. Daryl from San Francisco. He says earthquakey San Francisco. Did you have some earthquakes last night? I've only experienced one earthquake in my life, which was when I was in Tokyo a long time ago. That must have been like maybe 12, 13 years ago. I actually woke up in the middle of the night. I was in a fairly high-rise hotel, and I could feel it, moving a bit. And it turned out to be, I think, a level 4, magnitude 4 or 5 earthquake around Tokyo. Yeah, that was a bit scary, to tell you the truth. Andreas from Mainz in Germany. Hey, near Frankfurt. Hey, Andreas, nice to have you. Andrea from Hamburg. Moin, moin, Andrea. Nice to have you too. Robert from Bavaria. He says Servus, or Servus, as Bavarians would say. Down there, up in northern Germany, we say it a bit differently. David says minus 7 degrees, probably Fahrenheit in Delaware. Nice to have you, David. Frank from Den Haag. Hey, Frank, good to have you back. Terry from Fort Collins, Colorado. I would imagine it must be cold there as well. And Aubrey from cloudy Cyprus. Oh, no. It's good to get some rain sometimes, Aubrey. Should not complain about it. And Keith said it's actually not raining today in Scotland. Okay, cool. And Daryl says, yes, there were some little ones, little earthquakes in San Francisco last night. Funny. All right. Oh, that's a long. I'm going to read your comment later on, Lenny. And Daniel says he's calling in from Fr French Polynesia. Wow, that's amazing. Where exactly is that? Is that I guess it must be in the Indian Ocean, if I'm not completely mistaken. That's amazing. What time is it over there, Daniel? Thanks for tuning in. And Earl says, can you repost the original URL? Yeah, Nicholas will do this. He will put the URL to our Liquidity View dashboard. We're also going to have it soon on the slides. And Aubrey says, no rain, just cloudy. All right, perfect, guys. Well, thank you so much for sharing your location with me. Let's get into it. All right. So once again, today we will be on the lookout for what we call swing trades. So swing trade typically lasts between 1 and 20 weeks. It's not written in stone. It could be a bit less, a little bit more, but that's approximately what a duration of a swing trade is. So it's not really a day trade, which you would open and close within the same day. And it's also not a super long-term investment, which you may hold for years or maybe all your life. So it's really right in the middle of these two extremes. So what we're going to be doing today is what we have coined the 13 minutes strategy. Why 30 minutes? The duration is not really so important, the exact duration. But what's important is this is something that you can do in just a few minutes. And we encourage you to do it every single day after market close or maybe before the market opens. Spend a couple of minutes using our dashboard, our scanner to find interesting setups. It's something that can be done very quickly. It's really time efficient. Our dashboard is optimized for speed and efficiency. And I promise you, every single day, you will find some interesting setups to be considered when the market opens. And you may even place some trades based on this. So what we're going to be doing today is exactly this. It will take a bit more than 30 minutes because I talk a lot and we're going to have some questions to answer and so forth. But once you get the hang of our dashboard, I promise you this is just a couple of minutes every single day, and you will see a couple of minutes well spent most of the time every single day. Now, who are we? Well, we are tradingindicators.com. My name is Daniel. I'm the guy here on the left-hand side, and together with Homa here in the middle, my partner in crime, we have created trading indicators about 10, 11 years or 10 years ago. And about halfway throughout our history, Niklas here on the right-hand side has joined us, and he's been instrumental behind many of our latest developments. And Niklas is also in the room today to look out for your questions. So please don't hold back if you have any questions. Now, we are called tradingindicators.com for a reason, and the reason is we specialize on creating and developing innovative trading indicators. We've done this for many, many years now. This is really our bread and butter. We've seen it all. We've built thousands of trading indicators for clients all over the world for various platforms like TradeStation or NinjaTrader, Thinkorswim, Modifwave, MetaStock, MetaTrader, and so forth. So we've really seen it all. And and this is what we specialize in. And we also specialize in what is called technical analysis. We believe that certain patterns, which are visible directly on your price chart, these are mathematical patterns, they will have significance on how price will react to it in the future. This is what technical analysis is all about. We don't try to analyze fundamentals too much. I think this is very complicated to begin with. And secondly, it's really hard to know already what is priced into the market and what perhaps comes as a surprise. So we specialize on technical analysis, which, as you will see to many levels, is much more straightforward and easier to master. We also believe that trading is simple, but you need to know what to look for, and you need to use the right tools. And one such tool is our trade scanner called Liquidity View. It will allow you to scan through thousands of symbols in just a couple of minutes. In fact, the scan only takes like a fraction of a second. It's super fast and efficient, and then you spend perhaps a couple of minutes to analyze the most interesting scanning results. All right. Last but not least, if you have any questions, don't hold back. Please put your questions into the Q&A box, and we will get to those as we proceed through this webinar. One last reminder, please keep in mind that when you trade futures or stocks or ETFs or really any asset class, the trading does contain risk and therefore is not suited for every investor. If you trade, make sure to only use risk capital, which is money that you actually can afford to lose. When it comes to backtest performance or hypothetical performance, keep in mind that this is not necessarily indicative of future performance, and any trade ideas and setups and strategies discussed in this webinar should not be construed as trade advice. These are for educational purposes only. All right. So with this out of the way, a couple of housekeeping items real quick. We're not going to spend much time on it because we want to get to the charts as soon as possible. First off, Actually, I'm having a really busy day today. This is my second webinar. I had one before this for our German community. Now this is for our English-speaking community. And then afterwards, I will be presenting at 1:30. There was a small schedule change at 1:30 p.m. at the Traders Corner event. It's not too late to register yet. All you need to do is to go to this link down here, tradingindicators.com/join. And Niklas, please put this link into the chat box for everyone. So guys, if you want to check out this conference after this session, of course, so I want you to stay here on this one. I want to see what I have to, I'm going to be talking about. I'm going to be talking about some of our flagship indicators in this event. Go to tradingindicators.com/join for this. Also, what we will be doing today is to interactively scan through or scan for interesting setups using our Liquidity View dashboard. If you don't have access yet, I encourage you to get access right now because it would be best if you would follow along interactively as well. And if you don't have access yet, we do offer our dashboard for a free trial. by simply going to tradingindicators.com/view. There are no contracts involved. You can cancel anytime and you won't even be charged for an entire week. And best of all, you will get instant access to our dashboard. This will only take, I don't know, 30 seconds, maybe 1 minute. And then you can use the dashboard, open it up, and follow along interactively. So try it out at tradingindicators.com/view. Also, and I repeat myself every week, but I think it's important because what we will be doing today is we're going to be scanning for certain setups, which are setups that I like for swing trading. But the dashboard can do so much more for you. So if you're an options trader or perhaps a long-term investor or a dividend investor, or you like earnings plays, you can do all this with the dashboard. And if you want to know how to access all these different features and how they work and how they could help you in your trading, please check out our very comprehensive bootcamp. It's really long. It's like 2.5 hours at tradingindicators.com/bootcamp to see or to learn about all the different features of our dashboard. We also have a Discord channel, which we encourage you to check out. In there, we do post setups, oftentimes for day trading, but also sometimes for swing trading throughout the week. A couple of setups every week. Our users are posting setups. They're posting questions. They are helping each other out. Check out our Discord channel at tradingindicators.com/Discord. And we do have an ebook, which you can download at tradingindicators.com/power of 3. Nicholas will put this link into the chat box as well. And in this ebook, we are further detailing the 3 main setups which we will be considering today. And lastly, if you have any feedback regarding our dashboard or questions or anything to note, please don't be shy. Your feedback is what drives the further development of our dashboard. Simply put it into the Q&A box right now in your Zoom call, or perhaps if you're watching the recording, just send us a note afterwards. Hey, Daniel, could you add this symbol? Or what about this feature or this filter or this indicator? And if it's feasible, we'll be happy to add it to the dashboard. All right, with this, let's get into it. Let's have the market review. Oh boy, interesting days in the market, hasn't it been? Especially in the metal sector. We're going to get to this in a second. So I'm going to switch over to our dashboard. Let's start easy. Let's start with the SPY, the ETF that tracks the S&P 500s. All right, so what are we seeing here? Well, it's been volatile a little bit. Yeah, we had a bit of a big candle on Thursday. You can see it here, a big down candle here. The VIX actually spiked up a little bit above 20 for a brief moment of time. But Friday, things normalized a little bit again. Volatility went down. And I believe, this was just a temporary pullback. You can see it here. It's just a level 1 pullback as per our trend radar indicator. So in the end, nothing dramatic has happened. These pullbacks are very common. And I would not be surprised if we do see perhaps a bit of a deeper pullback next week. It may happen. You can see the interval in which these pullback happened. It's very regular. Every couple of weeks, we have this little red patch here in our trend radar indicator. These are pullbacks. So one here, one here, one here, one here, here, and here, and now here, one again. And they typically are like level 2 or level 3 pullbacks. If this continues, if this pattern continues, you may see a bit of a deeper pullback, maybe towards this first MA rush line here. That may not happen. We may stay here also on this level. Who knows? I think it's going to be a shallow one. And afterwards, I believe it will be quickly bought up again. And we're going to see another attempt at all-time highs in the SPY. Of course, we did have all-time highs on Wednesday already. So my outlook has not changed. Bullish in the SPY. Very similar in the Qs, the Nasdaq 100 ETF. So QQQ. Where do we have it? There we go. So opening it up right here. Also on the Qs, yes, we are. Actually, we make all-time highs. No, we didn't make it quite yet. We're almost there, but we missed it by a couple of cents on, Gen 28 on Wednesday as well. And then we did have a bit of a pullback here. And now we are a bit more interesting here in the Qs. Yeah, so if I had to trade one at the Qs or the SPY, I probably would pick the Qs. We do have a level 3 pullback now. It's been a bit more significant compared to the SPY. And I believe the Qs will get you the better deal in terms of price entry. But just be careful. We are facing this former resistance level here, or this older resistance level, and we may see another bounce off this level. But if we do, I believe it's going to be a short-lived one. So, yeah, at least at current price levels, I think we're not as extended as we used to be all the way up here in the ozone layer. So we're a bit cheaper right now, and this could be, to me, at least an interesting long opportunity, or perhaps to scale into a long position in the Qs. What about the IWM? It's interesting there. You'll see it right now. Who remembers what we called out last week? What might be happening in the Russell 2000s? Well, let's check it out. We already knew, yes, the Russell did outperform the SPY and the QQQs. It was pushing to all-time highs, yeah, way before the SPY did, and we did reach a peak here on Jan 22nd. But what has happened afterwards? And we did warn from this. Remember this little rectangle here? This was drawn last week because I was anticipating it is not unlikely, and this, of course, turned out to be the right call right now, that we may see an attempt to retrace and retest this broken resistance level here. And prices have been coming down. In fact, if you look at our scanner here, let me just quickly hide a couple of things, just real quick. Oops. Give me 1 second. I'm just going to also take this one out. Yeah, what do we see here? Long break. Oh, just long break here. Okay, I thought I was saying long break retrace. We're not there yet, but if we come down a little bit closer, and I do believe we will, this could be an interesting long entry opportunity here in the IWM. If on Monday, perhaps prices will retrace a little bit lower, maybe to the 256 area, I believe this could be, yeah, interesting long. And compared for all the option sellers and cash secured puts traders out there, the IWM does have slightly, it's still cheap, slightly higher options prices than the SPY and the QQQ compared to the actual stock price. So here we are at 2.43% for the at the money options 30 days out. Compared to the Qs, for example, let me just quickly see, Qs are at 2.95, cheaper, and the SPY even cheaper at 2.02. So if you want to sell options, I know them, selling options is an attractive play, especially if premiums are high. Not saying they are particularly high in the Russell, but if you had to pick one index, I probably would pick the Russell because the premiums are a little bit higher there. All right. So that was the Russell. Now, what about oil? Actually, everything I'm going to talk about now is going to be super, super interesting. Let's start with oil. Okay, so it is getting close to a level where I will be very interested in potentially shorting oil. Not quite yet. I do believe we still have a bit to go, but if prices come up all the way to this key resistance level here at around 83, I believe this could be, we'll see how it turns out, if perhaps some liquidity capture events are also coming along. This could be an interesting short opportunity for oil if we get up to this extreme. Why? Let's look at the history. Let's see where oil has been in the last couple of years. Well, it's been basically alternating between these two extremes, up, down, up, down, up, down. And every time it approached one of these extremes, especially to the upside, especially to this 83 level here, we did see a sharp bounce off this level towards the middle in between support and resistance. We actually called out this trade here in our trading room back in June last year, when oil was making this last attempt at the 83 level with a couple of liquidity capture events. These little shaded boxes here, these are liquidity capture events. These are candles which are wicking into the resistance level. They cannot break it, and they do have abnormally high volume. And if this happens, first of all, something seems to be up. Somebody, is interested in this levels, driving up the volume. Institutions who have the buying power are interested in these levels, and oftentimes this can be interpreted as the chance of having a bounce of this level are simply greater than the chance of a break above the level. So once we get up here, if we do, this is definitely something we will be looking out for. All right, now this was oil. What about gold and silver? Oh boy. What did we talk about week after week after week after week after week? And I felt foolish saying this because prices were just coming up higher, higher, higher. But I kept telling people, I personally will not go long gold. I personally will not go long silver because prices were extremely extended. We are very far away from our averages. The chance of a significant pullback, they are too big to me. Now, we've seen this pullback. It started all the way on Thursday. We made all-time highs in gold and silver. This, of course, is gold here. And we pulled back, and then a real big pullback on Friday. Huge move to the downside, I believe, in gold. Let me just quickly
Silver
measure
almost
this.
went down 50% on
Yeah,
Friday.
it's unreal, exactly. So gold, for example, from the extreme to the extreme, from the all-time high down to the low point here at 15%, and it registered as a level 2 pullback on trend radar. And I think we can see long break read already written here in our scanner resistance level, which may now be acting as support. So I'll be very interested to see how the market opens on Monday. If we see a bit of an additional retracement, maybe down to this level here, I would be very interested in potentially going long gold, maybe selling some puts, cash secured puts. I believe gold is something that everybody should have in his portfolio if inflation numbers are being high. This, to me, is just a regular technical correction within an otherwise very strong uptrend, and a great opportunity potentially to go long here. And if you just look real quick at the option pricing here, at 11.06, you're getting 11% premium compared to the stock price for the 30-day options in GLD at the money. So that's much higher than on the SPY, where you only get 2%, for example, or the Russell, where you get 3%. 11% is decent. It's pretty good for selling. But do you want to see what's even better? I'm not sure I'm gonna do it because silver is just so volatile. SLV, what happened in silver? Oh boy. So silver, this is another, you know, evidence to some degree that if something goes up very, very parabolically, very, very fast and extreme, the pullbacks that may result because of this might be extreme as well. Look at this huge move down. It's just a level 3 pullback on trend radar because prices were so extended. But finally, for the first time since, I don't know, since back here in November, we actually close now to our averages. You can see prices are close to the first MA rush line. Finally, it's been so far away. Now the huge pullback. And if you measure this out, Niklas, you were absolutely right. If I measure this from top to bottom, from both extremes, from the high all-time high to the bottom price here, 37% retracement here in this ETF. On the futures, I believe it was even more extreme. Crazy move down, and 36.56% premium for the options. Options are super expensive, so buying options, I believe, not something you should be considering. And if you believe silver might be recovering and you believe in that medium term, then selling puts, potentially any option selling strategy with these kind of premiums is something to be considered on Monday, definitely. So please, we may have a special section on this in our lunch and learn session on Tuesday, because this is a quite unique opportunity with these kind of option prices. I believe it's probably going to go down a little bit. 36 is really extreme, maybe to like the 20s or so on Monday. Nonetheless, a great opportunity to potentially use an option selling strategy to take advantage of this first pullback in silver, the first meaningful pullback in silver since how long? Since back here, November 2025. All right, so that's with silver. We have one more symbol, which is Bitcoin. All right, so Bitcoin, and I don't want to toot my own horn, but remember when we said week after week that what we are seeing right now, this is an old graphics here, what we are seeing right now in Bitcoin might be a level 3 correction after this big uptrend that we've seen. So level 3 corrections after a huge move up are quite common. And if this was to play out, then we had one leg down here, or first leg, then a leg up, which is normal in level 3, 1 to 3 corrections, 1, 2, and the third leg would bring us below this swing low here at this point, and I believe it will bring us all the way down to this level here at 73,000. If this happens, I will be probably one of the first ones who will reinvest or add to my existing strategic Bitcoin position. I have having this for many, many years. As a long-term investment, not as a swing trade. I don't swing trade Bitcoin. We do day trade something on the future space, but for very short time frames. But if we actually are coming down to this level, this could be an interesting opportunity to add something to your Bitcoin position. We're going to discuss it if and when prices are getting to this level. All right. So this was our market overview. Niklas, do we have any questions regarding my market interpretation?
Yeah, we have a couple questions. We have one from Lenny for analysis. Between the SPY, SPX, and SPX 500, why would you choose one ticker over the other?
Hmm. Oh, for options trading. Oh, you can't really take. Well, you can
No,
buy
just
the
for
SPX.
analysis. Why would you look
Oh,
at SPY instead of SPX or SPX 500?
I'm just happy to choose the SPY. I believe they're all very similar in terms of analysis. Yeah, that's. Let me just have a quick look. Where do we have it? I think it's like this. This is the S&P 500 level one pullback. Yeah, I mean they do look very similar. There's no discernible difference to me. Yeah,
Neil says for gold and silver, he heard CME is raising margins on them,
yeah,
on the futures. Do you think that's already priced in?
yeah.
Okay.
I
And
think it definitely contributed. Yeah, I think all these news that something will be happening in the future, it's immediately priced in. And now the surprise would be if for some reason CME decides not to do it. But the fact that they're going to do it is priced in right now for sure.
perfect. Okay. And then Lenny says, I'm not sure about the heat index. Premium is the price of options. So is premium the price of options? So why is it good that the high heat index in gold and silver?
If
Isn't
you
that
want to
still an
sell
expensive
options,
thing?
oh yeah, if you want to sell up, this is not for buying options. I was talking about cash secured puts, which is this option selling strategy. So as an option seller, you want to sell as high as possible and buy back low. So that's why I said it. Because I know, it's an attractive strategy because if you're selling options, the time decay is always in your favor. If you're buying option, it's against you. So I know I like to sell options for positions which, first of all, I can afford in my portfolio if I should be assigned. And secondly, a position which otherwise I would like to see in my long-term portfolio to see anyways. So, like, for example, like JP Morgan or maybe an SPY if the options go a bit higher there, or gold even. So I like option selling strategies for that
And
purpose.
Massa wants to know, can you just simply explain what that heat index is? How
Yeah,
it works?
it's first of all, it's something calculated. You will not see this in any market prices. It's something we calculate on our end. It's an estimation. So if you go here and look at the tooltip, it says estimated. Now, what we do, and in our lunch and learn session next Tuesday, I'm going to explain this a bit more in detail because I got some emails about this as well. So what we do is, first of all, we are looking at the closest at the money option price. So let's say right now for the SPY, let's keep it simple here. SPY right now is trading at 691. So let's say the closest option price would be 692. All right, so we're looking at these options which are um, 30 days out. Now, with option expirations, well, actually, maybe the SPY is not the best. Let me go to JP Morgan just to make this a little bit more complicated in terms of calculation because the SPY has daily expirations. So JP Morgan has weekly expirations, I believe. If I just quickly go here, I didn't want to detour too much, but yeah, it has weekly expirations. So what I do, or what we do then, is we are looking at option prices. We're looking at the option chain right before the 30 days mark and the options chain right after that, because it's very rare that it actually hits exactly the 30 days threshold. So we look at both prices and we do a weighted calculation interpolation basically of these two prices to come up with this hypothetical value. So we're not going to see this in the market. It's estimated for what if we had an option expiration exactly at the current price at where we're at now, 292, 81, 30 days out. So this is approximately how it works. But the idea is, and you will always need to double check this with your broker, is to give you a feel of whether options right now are whether cheap or expensive. And perhaps you are an option buyer. So what you may want to do, maybe you're going to look at something. Hey, I want to look at everything less than 1% in option buying, like really, really cheap. Yeah. Maybe something that even has a nice technical setup, like this one here, LQD, whatever this is. Yeah. So, I mean, this is something that moves very little. That's why it's so cheap. But this is something that you can use in your research for a particular strategy that you have in mind. Okay, so I hope
Thank
that
you.
explains it. Anything else,
Yeah,
Nicholas?
so regarding silver SLV, when you sell puts, are you picking strikes based upon its delta or using the resistance zone values?
Oh, that's a great. That's great. Perfect question. So ideally based on technicals, because here, for example, wow, let's do gold. Gold is a bit easier because gold there is a technical level nearby. So GLD, also high option prices. So here, what I would do, I mean, first of all, I would wait for prices to come down a little bit. I believe there might be another leg down. We'll see if this happens. And then we see a level here, a resistance level right here. And I would put my estimation would be, hey, 30 days from now, this level is gonna hold at the minimum. I put my strike probably here around 430. And this might be a delta 30 option or whatever it might be. But yeah, ideally this way. So if I would put my delta would be based on technicals on the chart, not just arbitrarily. Hey, I want to look for delta 30 or delta 5 or whatever.
Thank you,
Should be
Daniel. And
based on
then
technicals.
Florian says for SLV, they have an heat index of 11.12.
SLV,
Yeah.
maybe reloaded. It should be 36 something. Yeah, maybe reload your dashboard.
Okay, thanks, Daniel.
Okay, great. Oh, you have an heat index. Oh, that's weird. Yeah, reloaded. Maybe this was yeah, I'm not sure why that is. Let me reload my dashboard real quick. 1 second. Maybe I was doing something wrong, but I kind of don't believe so because I believe I loaded this in a bit earlier. Okay, so let me go SLV again. Oh yeah. Oh boy. Maybe it did. That's a good point. Maybe it already oh, that's interesting. Maybe I had the wrong data. I apologize. Nonetheless, it's quite high. But the 36 did sound a bit extreme to me, but even at 11, huh. Okay. Actually, I would double check this. What is the current calculation? If you remember, we only released the heat index like a week ago. There might be still something to that we need to tune. Okay, perfect. All right, so let's move on. Let's now go to our actual scanning process. This is something that we yeah, are here for. So what we're going to be doing today is we're going to use our dashboard to scan for interesting setups. And what I want to do is I want to, first of all, focus on one setup at a time. And based on what we see, I want to then create a hot list. So I'm going to add all these setups to a hot list, or watch list, which I will then share with you. And then at the end, we're going to go through that hot list to see which of these symbols in that hot list are the most interesting ones for the next week and weeks. So what are these setups we'll be focusing on today? Now, first off, I will be looking for, or we will be looking for swing trades, long swing trades. And for which we consider stocks and ETFs primarily. Now, stocks and ETFs, they typically, not all of them, but they typically do have an upside bias. And I want to take advantage of this bias that stocks, more often than not, they tend to go up over time. Not all of them, of course, there's always exceptions, but the majority of stocks will go up. And there's evidence to this in our dashboard I'll show to you in a second. And I want to take advantage of this upside bias, which is why we will be trading today or looking for setups in the long direction today to take advantage of this upside bias. So we'll be looking for stocks which are trending upwards to begin with to look for long entries. But as a trend trader, there are good moments to get into the trend trade and not so good moments. And I don't want to, repeat the same story, but remember when we talked about silver week after week, the prices were already extended and prices still went further up. Where I kept telling you, unfortunately, I'm not happy this happened. Actually, I'm happy for myself, but not for anyone who potentially has lost money. This is, of course, not nice. But I warned everyone week after week that, hey, prices are far away from our averages and getting further away and further away. And this increases the chance of seeing a meaningful pullback. And unfortunately, if you were long at these levels, this has happened now, and we retraced almost 30% or even more. So this is exactly what I was worried about. This is why I did not get into any long position in silver. But now, of course, it's a different story. Now we have retraced. Now we are back to our averages here. And we do have a level 3 pullback. Now silver has become, to me at least, in our approach, more interesting because now we are at this retracement moment where we're coming back to our averages. And these retracements, these are flagged to us, among other indicators, by our trend radar indicator, which shows you these little red patches in this heat map. And these red patches, we call them healthy pullbacks. Why healthy? Because they're right at the sweet spot. Prices have come back, but not too much to, get into a complete downward trend reversion. So they're still healthy, kind of a shallowish. They're significant, but still shallowish. This is like a healthy pullback to us. And ideally, we look for a level 3, 1, 2, 3 levels down, or 4 levels down in our pullback. And then, if we want to push the envelope even further, we want this pullback to coincide with a technical level on your chart. Ideally, a support level or perhaps a broken resistance level. This is what we'll be looking for. Now, how can we find these setups on our chart? So let me go back to our dashboard, and we're going to enter these criteria now into our scanner. So first off, we want to look for stocks and ETFs which are currently bullish. And for this, we're going to use our MA Rush indicator. So I'm going to just show you an example here with Agilent. Agilent is bullish right now. I'm going to show this to you on the chart. We can see it here. Our MA Rush indicator shows a bullish label on the chart. Great. So we are bullish. And for this particular symbol, we are bullish for 70 trading days. And I know this, not because I just counted these candles real quick. That would be very tedious. And, we are trading indicators. We believe that everything tedious should not be left to the trader. This should be done by tools and indicators and scanners. And this is exactly what we can see here on our scanner. It shows us this number here right next to the right of it of our upwards facing green arrow. It says 70. That's the trend duration. We are bullish for 70 trading days. And you can see this different symbols have different durations. And this also works for the bearish trend. For example, this one here, AACG, bearish for 36 trading days. And if you were to count from the last candle here all the way to this level, to this label, you would get to exactly 36. Now, the cool thing is that in our dashboard, we can actually filter and sort by trend and trend duration. So how do we filter by trend? Well, we simply go to the filter icon to the right-hand side of this column and select bullish. Great. We can see that of our 5,771 stocks or symbols that we're currently tracking, 3,400 of them are currently bullish. You can see above 50% are bullish, giving evidence further to the fact that, hey, stocks on average, they tend to go up more often than they go down. I mentioned this before. All right. But of course, this is still way too many 3,400 stocks. We can't go through all of these manually. This is why our second criteria is going to be a trend filter. So a trend duration filter, I should say. So I'm going to go back to my filter icon here, and I will activate a second filter. Bull signal greater than 500 trading days, meaning I only want to see stocks where the trend duration is greater than 500 days, like this one here, 701 trading days, for example. And maybe this one here, ACA, or this one here. So I'm going to activate this filter right now. All right, now we're done to 822. Wow, there are many long-term uptrending stocks. I don't know if you knew that, but 822 stocks are trending bullish for more than 500 trading days. That's quite impressive. All right, so moving on. Our second criteria is, hey, we want to enter into a position when we are not extended. Let me just find something where we are currently quite extended. Let me just quickly see something here. This one here. I probably don't want to enter all the way up here. I want to wait until prices have pulled back to at least level 3 or level 4. So in this case here, we are pulled back level 2. That would not be qualifying. I want to find stocks which have pulled back at least 3 levels or perhaps 4 levels, like this one here. APH. Yeah, 4 levels down or 3 levels down. 1, 2, 3. That's a pullback, which I'd be interested in. So how can we filter for this? Well, we're going to go to our pullback column and select level 3 and level 4. All right. And now we can see we're only, in quotes, 161 symbols now to consider. All right, it's already getting better. And our third criteria. And by the way, silver will be in here. So let's just search for it. If you go through it, where's our silver? It has to be in here. Oh, maybe silver is not bullish for 1 second. Why is silver not in here? 1 second. Maybe I'm contradicting myself. Give me just one quick moment. Oh, there's silver. Oh, silver is only bullish for 474 trading days. Oh, that's interesting. I didn't even look at this. Anyways, our trend duration filter, greater than 500, filtered out silver. So, but you get the point. If you want to, you can make this as strict or as relaxed as you want, these filters. So let's just leave it at greater than 100. Okay, so our last criteria was we wanted our pullback to coincide with a key technical level, a key support level. How do we find this? Well, we're going to go to our Liquidity IQ setup column here and select long bounce. All right, that means prices need to be near a key support level. For example, like this one here, AutoNation, AN. What do we see? All right, let's check it out. Bullish symbol, very bullish for a long time. For many years, AutoNation is bullish, but currently we put back to this key support level, and it's a level for pullback on trend radar. 1, 2, 3, 4 levels down. These are the symbols which I will be interested in. All right, so let's I'm going to add these symbols to our watch list in just a second. Here another example. CLS. Let's check it out. Yeah, same thing. Bullish, pullback, this level 4 pullback towards the key support level. And here the anticipation is we're going to be bouncing off this level towards higher price levels. All right. Okay, so these are our scan criteria. And one thing I like to do is I like to sort by trend duration. We already have a trend filter on. Everything needs to be trending for more than 100 trading days, but I like to sort from highest to lowest, allowing me to focus on the trades which have been trending up for the longest. We're going to skip the first one here, which just tracks the S&P 500 and the London Stock Exchange, but AutoNation would be our first real symbol to be considered. In fact, I'm going to add this symbol to our watch list right now for the next week. So I'm going to create a watch list now. All right, so I'm going to go down here. You can see all these watch lists that we have created. In fact, what I forgot to do beforehand, I didn't review our trades from last week yet. I'm going to do this towards the end. So I'm going to click create. Okay, weekly swing trades. I have to speed up a little bit because I do have this other webinar coming up. 2026 01 31st. All right. I'm going to add AutoNation to it. There we go. And I will then also share this watch list with you. So I have this button here as an admin. I can share watch list with you. And I can unshare a watch list with you here. In this case, I'm going to unshare the one from December 20th to not clutter your space. So I'm going to unshare this one. Done. All right. Perfect. So AutoNation is our first symbol in that list. But let's continue. The next one, Sanmina Corporation. All right. Let's check it out. Interesting one. That's a kind of a volatile stock, but in a nice uptrend. It just had earnings a couple of days ago. We can see this little earnings gap here. And now we're trading also here near this support level with a liquidity capture at the last bar. If you remember, liquidity captures are events which, in my view, will increase the chance of a bounce rather than the break of the level. So we're also going to add this stock to our list. All right. Next one. United States Minerals. All right, let's check this one out. USLM. What do we see here? Yeah. Oh, actually coming from all the way there. Wow, that's an interesting one. I think I'm gonna skip this one because this is quite jumpy. Wow, huge move here. Actually, let me quickly see from what time on are we bullish. Well, I mean, it's interesting. We had all-time highs here in December 2024. We're bullish since November 2022. big retracement since then, and now we're kind of in this small range between 120 and 120, 130. To me, maybe a little too little room in that range to make this a meaningful trade. I'm going to skip this one for our watch list. Eurocat, I'm not going to trade currencies, but also you can see currencies, can have the same setups. So here, potentially, if you're looking for a longer term currency trade, maybe speculate on a bounce off the support level here at 160. Celestica. All right. Oh, that's interesting. Long-term uptrend for, let's have a look, for 771 trading days. Quite a high heat index, 9.16, meaning options are expensive right now, and potentially something to be considered for a long entry, or maybe some cash secured puts at current price levels in anticipation. Okay, we're going to be bouncing off the support level here. Maybe prices are going to come down a little bit further, and we're going to come back towards at least this resistance level here at 350. Yeah, also an interesting one. So I'm going to add Celestica to our watch list. And perhaps one more, which we have here, Interdigital, IDCC. Let's check it out. Yeah, this one is not interesting to me. And at some point, I think we're going to add a new logic to our setup scanner, because here you can see it previously. This red level here, it was previously broken. Prices came below it. To me, this weakens this level, and the fact that we are now at this level again doesn't make it so interesting to me. So I'm going to skip this setup. Two more. One setup which I really liked. I'm actually just gonna quickly find it for you so you can learn about it. Is Gold Fields. I already talked about potentially getting into the GLD, but also Gold Fields. GFI has an interesting setup. If you look at this one here, yeah. Actually, in fact, I'm gonna get to this in just a second. Let me just quickly see something. Oh, never mind. Actually, I wanted to explain first this particular setup, because here what you can see, because I'm going to go back to my slides, is something we call the zone break retrace. So what is this? Just bear with me for 1 second. So zone break retrace happens when a level is broken. That's a precondition for this. This can happen to the downside, but since we're trading long today, we're more interested if this happens to the upside, if resistance is broken. You can see it here. This resistance level was broken to the upside. Prices then initially went up, but then they retraced. That's where the name comes from. They retraced down to the broken resistance level, which at this point, however, would have changed roles and will act as support. We have heard it all before. Support can become resistance, and in this case, resistance can become support when it is broken. It's exactly what happened here. We went up, then down. This level now is acting as support, and oftentimes this can be a launch pad for the actual breakout move to happen. We call this zone break retrace. The nice thing is that with our dashboard, we can actually scan for these setups as well. Let me just go back to my scanner here and select in this particular case. And Nicholas, just as a side note, please remind me to also show Palantir later on, because that's going to be an interesting setup. This is actually the one I wanted to do.
Yep,
so
sure.
Select long break retrace here. All right. And for example, what we see here with GFI, we can see, okay, GFI right now is in such a long break retrace setup. It's a gold play, similar to GLD. They have like similar things. But here in GFI, I think we're a bit closer to this level at 47. So this perhaps makes it even more interesting to do something here at this level in anticipation. Okay, we will see a bounce off this level towards higher price levels. Yeah, interesting setup. Of course, it's highly correlated with the gold price. So if gold is coming back out of this pullback, this stock will benefit. But nonetheless, I'm going to add this one to our watch list. And of course, if you're more interested in trading the GLD, the general gold ETF, that's a possibility too. The only thing here is that we are still a bit, technically far away from this level. So here I probably would wait potentially for prices to come down to this price region here, this little rectangle which I drew, and then look for long. So looking for at least a level 3 pullback on gold. I still will add it to our list. All right, perfect. So what else do we have in here? NRP. Okay, let's start from the beginning. Yeah, look at this one. Zone break here was very flat for a while. Finally, the zone break and then the retracement back to this level. Let's quickly see where are we coming from. I'm gonna skip it because it just seems very sideways, and if things are so volatile, I think that hey, we may retrace a bit further down. So not the cleanest setup. Also went up very fast and very fast down. Let's skip it for now. ROL, yeah, same reason here, or different reason, but also a homing retrace setup. But here the bounce of this level has already happened. Look where prices are right now. We've missed that trade. This would have been interesting on Thursday evening. KLAC. Okay, that's more interesting. The KLA Corporation bullish for 794 trading days, level 3 pullback, and we have a bit of a gap here. You can see it here. We gapped down and we came further down to this level. If we are approaching potentially our level here, I think this can be an interesting long trade for this particular symbol. And perhaps one, actually, going to add this one to our watch list real quick. And lastly, let me skip these indices here. Marriott, MAR. Let's check it out here. Yeah, it's interesting to zone break. We already came down to this level, then up again, and now we're kind of stalling out here. Here, I personally would also wait a bit. Perhaps we're going to come down a little bit further next week, and then potentially look for a long entry here for Marriott. So this, I think, can be an interesting one as well. All right. So what have we found so far? So I have to speed up just a little bit because I do still want to go to your symbol request and answer some questions towards the end before I have to jump over to the Traders Corners conference. So I'm going to take this out here and let's review our watch list. All right. So which symbols have we found? 7 symbols. That's a decent number. Let's go through them one by one. Starting with AutoNation. I like it. I think it's a symbol which has been bullish for quite some time. We are coming down to this key support level here. It's a level 4 pullback as per Trend Radar. The only thing here is that we have earnings coming up on February 9th. Just be aware of this. When you take this trade, of course, earnings can always bear some surprises. But nonetheless, I do like this setup here. I'm going to add it to our trade notes. All right. And by the way, we did have it previously also in our notes, but I'm going to add it again. All right. So with today's setup. There we go. And save. And close it out. Perfect. Next one. SANM, the Sanmina Corporation. Another gap here. Huge moves. Yeah, I don't know what's going on here. It's quite volatile. I believe the volume probably in that stock is not so high. Let me just quickly check. What is the volume of this stock? Where do we have it? 1.3 million. It's not too bad actually for a stock like this. So it's decent. Okay. Interesting setup, especially with this gap here. So this is a big down gap. Down gaps are bullish setups, and oftentimes because these setups will get filled over time, and for this gap to be filled, prices would need to come up all the way to this resistance level. I like it. I'm going to add it to my trade notes. All right. Perfect. Let's go. All right. Save it. And we will close it. Perfect. Next, KLA Corporation. Yeah, we're just a bit too far away still here. It's not so interesting. I really like this trend the stock is in. A bit of a retracement here, a bit of a gap to be filled. I will wait here for prices to come down a bit further. I'm going to skip it for now. I think next week we will have a better opportunity to get into this one. So I'm going to skip it for now. Celestica. All right. Yeah, nice stable uptrend. You can see it here, coming down to this key support level near 263. We're still a bit further away. So here also, I would like to see my entry maybe a bit closer to this level. If we get that, this could be a really interesting long opportunity. I'm going to add it to our trade notes. And by the way, these trade notes, they will contain and include your annotations. You can see it right now. This little rectangle, which you just put onto the chart, it's put also into the trade notes. All right. Close. Marriott. All right. Zone break retrace here. I'm going to skip it. I think we have bigger fish to fry for 2 reasons. First of all, we are not there yet. And secondly, look at these big volatility steps here. It is not uncommon for this level to, just being powered through just because the volatility of that a particular stock is quite high along the way. Let's skip it. I think they're easier and smoother stocks to trade. Gold. Okay, let's pick one of the gold trades. I would not trade both. Either the GLD or perhaps the Goldfields stock do have interesting setups here. Yeah, even for options. Let me just quickly look at the option prices here. What do we see here? So GLD, of course, even has daily expirations. So if we were a 4.88, GFI only monthly expirations, which typically is a hint that, hey, options may not be as liquid because we only have monthly expiration prices at 775. It's a judgment call, depending on your trading style. Both setups are interesting. From a technical point of view, GFI has the more with a cleaner one because we are right at this level. You can see it here. We are right at this broken resistance level. We're very close to it. GLD is a bit further away. It's a judgment call. I will. Because we talk about GLD all the time. Let's pick GFI here for a potential long trade for this particular symbol. Of course, I would not trade both. You don't want to over leverage yourself. You will pick the one which suits your trading style better. All right. Perfect. So I do think we do have some interesting setups for the next week. And real quick, just for 1 minute, let's review what we found last week just to see which ones worked out. So I'm going to start here with AFLAC, AFL, bounce setup, beautiful bounce, textbook bounce off this level. We called this last week. Nice move upwards. AppLovin, yeah, here initially it looked really good. Then this big pullback here, it's still interesting. AppLovin, we do have this pullback now towards this level. I like it still, but Friday, of course, was a bit of a down day here. HIG, Hardwood Insurance Group, beautiful bounce. Look at this one here. What a nice move after we hit support here. Worked out nicely. HWM, still nice. I still like it. We went a little bit below this resistance level. This is zone break retrace. I still like it quite a bit for a long entry, even at this level. Maybe even more at this level right now, because the pullback is a bit deeper. So we're still in good shape here. JP Morgan, another great winner. Nice bounce off this level towards higher price levels. Lewis Corporation. This was our trade of the week in our newsletter. Look how beautifully this has worked out for a bounce. Now we're trading right in the middle, in between support and resistance. And then we have Wells Fargo, WFC, on the way to fill this gap here exactly as we planned. So also this one is looking promising. So overall, I'm happy with last week's performance. All right. So Nicholas, now it's time for some user questions. Do we have any questions coming in?
Second.
Because if not, I'm gonna look at Palantir first. Real quick.
Oh
Actually,
yeah,
let me
Palantir.
take this away.
And what's your definition, Daniel, of a magnet zone and then a number beside it?
Yeah, I get that. Actually, Palantir, it technically was not picked up by our scanner because we're below this support level. So not above. So this is not a bounce setup technically anymore. Nonetheless, I of course do like Palantir at current price levels a lot. I think that's a stock which does have potentially a bright future. If you can hold on to it. We have earnings coming out, I believe, not I believe, on Feb 2. So I definitely would wait for this earnings to play out. But if we are in the vicinity of this level, maybe even before that, if you want to gamble a little bit on the earnings, it's an interesting long play here. If you're willing to take into account some volatility, especially after this big pullback here to 146, I think overall this uptrend is going to continue. It might go, but I would not be scared even if it goes down to 125 to 126. That's in the books potentially, but just something to be aware of. Palantir right now is available at quite some discount. And if you believe in the long-term future of this stock, this could be potentially an interesting opportunity. Even with options right now, of course, we're right before earnings at 7.27. That takes into account the earnings. The heat index will go down after the earnings come in. It's an interesting setup for sure. Anyways, let's now go to some symbol requests, Nicholas.
Yep. Okay. So on SLV, could we look at that again? Lenny wanted to know, wouldn't a bounce be better than a broken level? Why isn't that a bearish move? Was I taught badly before?
No, we're definitely bullish here. So about there's definitely no bullish move, a bearish move here, because we always want to trade with the trend. So it's bullish. And what I said up there is, well, first of all, the bounce, there's no level here. We're just very extended. So even, in the previous weeks when prices were here or here or here, there were no technical levels all the way up here. The technical levels are here, here, and here. So price was trading above this level. There's nothing to guide us really. Um, and I was just saying, since prices are so far away above the averages, yeah, they're expensive. And if things are very expensive, a pullback might be expensive to the downside as well. So I was just being wary of this. But now, up to the current price level, it's interesting now. All right, huge drop. This could be potentially something to add on to your position, because now, look at here, we are right at the average again. Now that's an area which is more reasonable. Up here was not reasonable to me. Way too expensive.
Thank you. Okay. And then we please look at Oracle. And did you, Terry, I posted a link to our boot camp, so it explains some of this stuff. But Daniel, what's your definition of magnet zone and the number next to it? Could you
Oh yeah,
explain
I
it?
forgot to say it. Yeah, Oracle. I mean, we discuss it every single week. I don't know what's going on there. You made all-time highs. Larry Ellison was the richest man, richest man in the world for a couple of hours on September 10th last year, and then things are just going downhill. Ah, not sure. It seems to me it might become a value play, but would I enter right now? Probably not. I probably would wait for price to potentially come down to this level and then maybe look for longs in Oracle. But yeah, it's just a funny move, unprecedented. This gap was filled very quickly, this big up gap, and then just down, down, down. So I would definitely wait for some confirmation to see whether prices want to turn around again.
Okay. And dun, dun. Yes, the watch list for this week will be in the dashboard, right, Daniel?
Yeah,
That'll
but
be shared.
only if clients. So if you're not a client yet, and I'm going to share this slide real quick here again. Actually, I wanted to say this anyways. If you are interested in the dashboard, sign up for the 1 week free trial. Of course, you will get the watch list and actually all prior watch list for the last 5 weeks as well. In that trial, simply go to tradingindicators.com/view. That's completely free. You won't be charged today. Even though you will have to put your payment information there, there will not be a charge taken. This would only come after 7 days, but of course, you can cancel at any time before that.
Okay, and the next symbol, Daniel, is SOXL.
Yes. Okay, back to the dashboard. SOXL. Soxel. Okay. Short bounce. Okay, let's have a look. We are bullish for 75 trading days and at resistance right now. We can see it here. Yeah, and semiconductors. Yeah, right below this resistance level. And this is, I think we discussed it last week too, that hey, prices were right below this level. To be careful of this because we may see a bounce of it. Because this trade would not have much room. We did see this bounce now. Yeah, and things are a bit more interesting now. So we do have a level 1 pullback. I think it might still come down a little bit further, maybe to 55. And if it does, this could be an interesting long opportunity. I think right now we're still a bit too close to this resistance level for a trade to me, but of course, it's a judgment call.
Okay,
Yeah.
and how about B, the symbol B?
Boeing? Yeah. No, is it Boeing?
Just
Maybe not.
B, just the letter B.
Oh, yeah, yeah. This is one of these. Okay, 1 second. Let me. Yeah. 1 second. Just find it. Yeah, B, of course, for our search criteria. Uh, yeah, gold. Yeah, interesting too. I mean, also has an interesting setup. The only thing I don't like, I like it, of course. We have a nice pullback here, level 3 pullback, just like in GLD or Goldfields. Yeah, nice for a long play. But here, just because the indicator couldn't find one, we don't have a technical level near price. Whereas in GLD or in Goldfields, we did have this technical level nearby. But nonetheless, yeah, it's a good opportunity to potentially go long here. But just be aware earnings are coming up on Feb 6.
Okay, and now BWXT.
BWXP?
XT.
Oh, it's T. Okay. All right. Bullish for 883 trading days. A bit of a pullback here. Yeah, I would be careful here too. We're just fighting at this resistance level. We're really close to it. Uh, I would rather either wait until we maybe come down to the support level here or break it and then potentially look for longs. But right here, too close to resistance for me for a long entry. Oh, and by the way, what's the magnet zone? I forgot to say this again. Okay, This number here, in fact, for any of our setups, like magnet zone or short break or long bounce, the number to the right of the setup indicates for how many trading days this stock has been in the setup. So for example, here for Aflac, yeah, it's been now in our magnet zone for 2 trading days, because before this, it was near this support level. It was a long bounce setup. But since 2 trading days, this and this one here, we are in the magnet zone. And magnet zone means we are in between support and resistance, kind of in the middle of these two things. Long bounce, of course, like this one here, an AFG, would mean we are near a support level. Like we're right at the support level here.
Perfect.
For
Okay.
one trading day.
When you're looking at something like SOXL, Lenny says, don't you have to take into account the individual tickers, or can you just look at SOXL itself?
Yeah, for these triple leverage semiconductors, I mean, I see, Lenny, I like to keep my life really simple. I would not look at the individual tickers. If I like this chart pattern that lines up with my technicals, I might go for it purely based on what I see on the chart. Because to some degree, I mean, the whole idea of technical analysis is that fundamentals, in this case, the composition of this ETF, what's in there, the constituents, and what are their technicals. That's already indirectly priced in there. That's why prices are where they are right now. This is why prices bounce off some levels, and this is why the trend is bullish. So it's indirectly there. So to me, this eliminates the need of looking inside the ETF. It's in looking inside an ETF and see what's in there. It's just so complicated. It's not something I want to do. I like to keep my trading life as simple as possible. But of course, if you want to go the extra mile, um, it's everybody's it's up to everyone. But just to me, maybe the effort is not warranted by the extra degree of insights that you will get.
Thank you. Okay, and then the last symbol, Daniel, is going to be OKTA.
OKTA, Okta. All right, long bounce, so bearish for 72 trading. 72, 57. Ah, it's a long day. 57 trading days. You have a liquidity capture at the last event, but we're bearish. Yeah, I mean, it doesn't check the boxes for my long trades. Certainly not, because we're bearish. And for a short trade, I don't like to trade short to begin with any stock. But even here, if I were to trade short, it's certainly not right above a support level, or prices may bounce off from it a little bit. So this one does not check all my boxes. Great. All right, guys. Thanks, Nicholas. I need to jump off because, as you know, I'm going to go back to my slides for just a second. I will be at the Traders Corner in about 20 minutes, and I have to just prepare a little bit for this. And there we're going to be looking at, where's it? There we go. Looking at our Liquidity IQ and MA Rush indicators and how they work for day trading and for swing trading, and how, what's so special about these two indicators. So if you want to join us for the session, it's starting at 1:30. So this has changed the schedule. I used to be at 12:45. I was able to negotiate with Jeff Tompkins, a good friend of us, to swap spots. He's talking right now, and I'll be on at 1:30 today at the Traders Corner. And if you want to join, go to tradingindicators.com/join to join this event. Perfect. With this, guys, real quick, one last thing. Sorry for the jumping here. I was going to say, if there was a question which was not covered today, or if you have any other questions which were unrelated, you can always reach out to us via our homepage, tradingindicators.com. Simply click on support, then on contact, put your question into the contact form, and it will go straight to my inbox, and I will answer every single question personally. It might sometimes take a little while, so I'm a bit behind right now, but eventually I will get to every single question. All right, guys, with this, have a great weekend. Try to recover a little bit from the volatility in the metals on Friday and Thursday. And then I see you all at our next Lunch and Learn session on Tuesday. Until then, bye-bye, guys.